All right. Good morning. We are excited to have Josh Klenda on the show this morning. He has been a big supporter of the Veterans Real Estate Benefits Program, and he's a huge supporter of veterans. He does a lot in the VA loan space. He works for Community First National Bank, and so we're glad to have you on the show this morning, Josh.
Hey, good morning, Eric. Glad to be here again.
Yeah, it's great. It's great to have you, and it's always great to have somebody who really knows VA loans. And we've definitely worked together on a lot of veterans over the last few years, and you really helped a lot of veterans get in the home they wanted, get them the right loan, and all that kind of stuff. So we're excited to have you on the show and really share some of the information that you have with our viewers. So I'd like to just start out, Josh, because there's probably going to be a lot of people who watch this don't know who you are. So just a quick background of
Oh, sure.
of what you do and all that kind of stuff.
Yeah. So I run the mortgage operation for Community First National Bank. Been in the mortgage industry for 20 years now, really specializing in the VA loan in particular for the entire 20 years. And been honored to be ranked as one of the top VA loan officers in the country by the Scotsman Guide
Nice,
multiple years. So have a lot of experience with the loan and working with veterans day in and day out.
nice. Well, yeah, no, that says a lot. I mean, if you're ranked in Scotsman, then you're doing your share of loans. So that's great stuff, man. And you have been partnered with the Veterans Real Estate Benefits Program for a few years. We've definitely done our share of transactions together, so we appreciate everything that you do to help us thank veterans. And so I know that we're talking here in July of 23, and it's just kind of a strange market that we're in. Strange that that there's outside influences causing our rates to spike up a little bit. So I just wanted to kind of talk to you real quick about what's your snapshot on the market right now.
Well, the market's really busy right now. There's still a lot of buyer activity, buyer interest. Inventory still seems historically a little bit lower than what it should be. I think there's just a lot of sellers on the sidelines right now.
Right.
Mortgage rates, which are set by the open market, have been a little bit of a roller coaster that's continued through this whole year. So right now we're kind of in the mid sixes, but it's literally a day to day, situation. That's of
Yeah.
course without any point buy downs and things like that. But
Right.
that could certainly change pretty quickly.
Yeah. It's definitely volatile out there right now. I mean, we're definitely seeing the mid sixes. We are seeing a little bump up in the inventory, but you're right that there's a lot of sellers on the sideline. That there's a lot of sellers that don't really want to leave their 3% loans and go buy a new house right now. But we are seeing a little bit of increase in inventory, which is good because 6 8 months ago, I mean, it was like a ghost town out there for house for sale. So that's all a good thing. I mean, one thing I like to get the messaging out there is now is a good time to buy. Now's a good time. You've got a decent amount of inventory. You've got less competitors. I mean, there's definitely some activity, but you have less competitors. You have a little bit more motivated sellers. So now's a good time to buy, even though the rates might be in the mid sixes. You can always refinance in the future.
Yeah, absolutely. Yeah, as long as you can, kind of budget for that monthly payment, which may be a little higher than what it would be if rates were lower.
Right.
I think it's a good opportunity to get into a house at this time. And then eventually down the road, it may not be this year, maybe next year or the year after, we'll have some probably opportunities to refinance a lot of these loans down to lower rates and take advantage of that opportunity too as well.
Yeah. And the VA really gives the veteran a great, interest rate reduction, refinance. We like to call it an EARL in the marketplace, but the EARL is a great tool to reduce your rate quickly, and there's not a lot of cost behind it as well.
No, yeah, it's the best refinance program in the industry. There's virtually no paperwork. There's no appraisals that are needed. And a lot of times we can even do it where we structure it and we pay all the closing costs. So you're literally just saving money day one without any extra cost to it. So great
Yeah.
program.
Yeah, no, I agree. And so I still think now is a great time to get out there, shop, find a house. Don't compete with five buyers on a house. and get a seller a little bit more motivated. Seller might help with some buy down options to help bring down your rate. And then in the future, come back to that Earl and say, hey, as rates start to, adjust down, to refinance. But let's kind of jump into the meat of the show. Let's talk a little bit more about VA loans. I mean, they're not well understood in the marketplace. And there's a lot of people like us who spend a lot of our time during the day educating and trying to get that information out there, but it's still not well understood. So I kind of wanted to pick your brain a little bit. I first want to throw out there that there were some changes in 2019 that allowed the VA loan limits to kind of go away. So, there really isn't a VA loan limit anymore.
Yeah, that's correct. And that started in 2020.
Okay.
After that act got approved in 19. And before then, the limits kind of mirrored what the Fannie Mae Freddie Mac limits were. And then if the sales price was over that, there would be a down payment required. And so they threw that out. Now there's no loan limits unless the veteran has an existing VA loan that's still out there outstanding, or they had a prior foreclosure or short sale or something that affected their entitlement in the past. Apart from those two situations, there's no loan limit. So these areas, especially in the high cost areas in the country, you can purchase a house, and not have a down payment at all, and not have that PMI that you're going to see with other loans. So it's a huge advantage, especially in the high cost areas. So
it really is. I mean, we have closed our share of $1 million, $1.5 million VA loans, which 4 or 5 years ago was not even a possibility. So it's really an incredible tool for veterans. A lot of veterans aren't aware of that. The other thing I wanted to talk about was the reuse of the VA loan. I mean, we still talk to people every day who thinks they're one and done. They use their VA loan once. I used it back in 2019 to buy my house, and I can't use it again. So let's talk about that for a second.
Yeah. It's not a one and done program. In fact, I tell a lot of veterans you can have multiple VA loans at one time with some restrictions. There's some calculations where we have to look at how much entitlement they have remaining, how much the new sales price is on the transaction. And a lot of times there may not be a down payment even with that second VA loan while they have an existing one out there. So it's a situation that you can have multiple out there, or just reuse it over and over again as long as you sell your existing house or pay that mortgage off. So
yeah, it's a good point. And so we really want veterans to understand that it is a loan you can use over and over and over, and there is no limit to the number of times you can use it. So don't give up on it, because it is a great loan option. The other thing that I wanted to talk about was that the VA loans really give the veteran a lot of options in the way of qualifying, from a debt to income ratio to credit scores and all that kind of stuff. So I want to kind of get that information out there, that it's often not as hard as they think it is.
Yes. So your traditional conventional loan uses a calculation called debt to income ratio. It's kind of a simple calculation. It's just all of your minimum monthly debts. You add that to your monthly mortgage payment, and then you divide that by your gross monthly income, and that's going to give you a percentage. On conventional financing, it's a strict 50% max on that debt to income ratio.
Right.
So anything above that is going to be a problem.
Yeah, you're done.
Yeah. On a VA loan, they don't give as much weight on the debt to income ratio. They're more of a residual based qualification. What that means is, depending on your family size, the location of the property, and the purchase price, there's a certain net amount of money that the veteran household has to meet at the end of the month. And so as long as you meet that calculation, you still may qualify. And so we've seen VA loan transactions close with debt to income ratios, in the high 50s, 60s, in fact, sometimes. So there are situations that you can qualify, as long as you meet that residual qualification. So.
Right, exactly. And so I think the key messaging is that if you're a veteran and you're thinking about buying, it's great to reach out to us. You can reach out to us at, vrevnetwork.com. You can reach out to Josh at smartvaloans.com and reach out and get somebody who's smart like, Josh. Take a look at your whole financial package and what you can qualify for before you throw in the towel. So many people just read the news and they think they know it, or their buddy told them this, or their uncle who knows houses told them something. Just listen, get an expert involved, have them check it out so that you have the information to make a good decision. So I think that's key.
Absolutely, absolutely. And then on credit scoring, the VA they don't have a minimum score requirement. They're just an insurance company in the program, if you want to think of them that way. But your lender's going to have a minimum score requirement usually. And I would say the industry standard right now is around 600 to 620 in most cases. So, even though you may not have perfect credit and you may think you may not qualify for a conventional loan, it's worth checking into the VA loan, even if you don't have those, those perfect credit scores or even no scores. I have several transactions closing this month that the veterans don't have any scores, no credit at all. And we're still able to help and assist those veterans and we're closing those. So a lot more flexibility on credit, a lot more flexibility too on just blemishes on credit when it comes to like collections and charge-offs and stuff like that, where on conventional, those are going to be real problems when they're high collection balances and stuff. So
it's all good stuff. I mean, a credit score isn't that hard to improve when you get somebody like you that can like look at their package and say, listen, if you do A, B, and C, and you can even run some modeling and tell them what to do, and they can bring their scores up in a relatively short period of time. So if you're at a 580, 590, getting to a 620 is not that difficult to do.
Yeah. Right. And we have hypothetical tools in our credit bureau systems where we can just click a button and it'll sometimes just give us an explicit instructions on, hey, you need to pay down this credit card or you need to open an account and you're this likely to get a score of 620.
Right.
So
and
we have those
perfect.
tools nowadays. Yep.
Yeah. I remember in the old days, it'd be like, well, I think if you paid 4,000 of this, you paid this, if you did this, and then the person would do it and then nothing happened on their score. They'd be, well, let's rethink that. The guy's already spent a bunch of money on trying to fix his credit, but that's kind of a thing of the past. But, the other thing is that VA loans are definitely worth a veteran to consider, no matter what your agent tells you, no matter what your, favorite uncle tells you, check out the VA loan. It's often better than an FHA or conventional loan for a veteran for a whole host of reasons. So don't disregard it and don't let someone talk you out of it.
Oh, absolutely. If you're a veteran, you should check into the VA loan every time. And I'm not going to tell you it's the perfect loan 100% of the time. There are situations where something would be more beneficial. But those are pretty few and far between. I mean, high 90%, the VA is the route to go if you're eligible for that program.
Yeah. I mean, please check it out. It's worth your time. And force that loan officer. I mean, you should be working with Josh. You should be working with us. But if you're not, then force that loan officer to give you a VA disclosure that says this is what your VA loan, a loan estimate using a VA loan that says this is what it's going to be, fees, rate, all that kind of stuff. So you can do the comparison yourself. So please do that. But hey, Josh, we appreciate you being on the show. We appreciate everything that you do with the Veterans Real Estate Benefits Network. Of course, you can reach us at vrevnetwork.com, and Josh Klenda, you can reach him at smartvaloans.com. He always gets amazing reviews from his borrowers, and we talk to just about every borrower that closes with us, and they always have great things to say about Josh. So if you're out there in the mortgage world and you're looking for a loan, reach out to them. Again, smartvaloans.com. And then, of course, when you work with the Veterans Real Estate Benefits Network and you're a veteran, then you get a reward check after closing. The average check's about $2,000. So it's not a small check. So check us out. And we look forward to working with you and thanking veterans for what they've done for our nation. And Josh, I'd like to again thank you for everything that you've done as well.
Anytime. Love working with your team. So